Hi everybody, Alex Employer here from Expert Forex, and in this video we're going to explore some of the ideas behind how much you can expect to make from your Forex trading. So the topic is, what are your trading expectations and how realistic are they? Now this video is basically motivated from two emails that I received in the last 2 days, and the one said, I've just left my job, I need to make money to support my family, and the other one says, I've got $200 and I would like to make $100 a day. Now the other reason for the video is that we'll be starting a linked account service where you can link your account to experienced traders that have traded robots successfully with a good track record. And on your screen you can see an example of the accounts that you can link to, and you can see the monthly gains are reasonably good as shown there. Now many unrealistic expectations are created by sensational videos, and I must say I'm one of the guilty ones there, but if you do watch my videos and listen to the wording that I use at the end of these videos, I explain the context in which they happen. And on this particular video you can see a fantastic video. Almost a 250,000 viewers have viewed this video, where I basically generated over $1 million in a few hours trading a very specific robot, and that obviously created quite a stir. Now this particular robot, as shown on the screen, you can actually download it for free from our free forum. There's the link that you can use, and again all the links that I mention in the videos will be in the description of the video as well as in the commentaries of the video. But I had a look at this particular broker's price feed, and within minutes I had worked out an EA that could take advantage of their price feed. And on your screen you can see I then created an EA that actually sold the tops of candles and then bought at the bottom of candles. And why those blue ones aren't right at the bottom is because obviously there's a spread that happens. So I was basically, this EA was quite successful at buying at the bottom of candles and selling at the top, and that is why I was able to print money and turn $5,000 into well over $1 million. Go and have a look at that video, it's quite interesting. But something like this does create false expectations amongst traders. Now, just to bring the expectations that you can expect into context, we have a look at some of the greatest traders that have ever lived, and we look at some of the returns that they've made, and there we have a 12% annual return. Now this is over long periods, like 10 to 30 years that these traders have traded. There's Warren Buffett, who's made just over 20% per annum, Peter Lynch almost 30% per annum, Steve Cohen 30%, George Soros over 32% annual return. And then there's mention in this particular video at the bottom here of Jim Simons that has generated 60% return over a 30-year career. So bringing that into context, suddenly we go from generating $1 million in a few hours down to the more realistic levels where great traders are generating 20 to 30 to 60% returns in a year, which are much more realistic. Now the other thing that you need to realize, that these are great traders. You as a beginner, you're not going to walk into the room and say, here I am, I'm going to be generating 60% return from day one. These guys have experience, they know what trading is all about, and knowing how they go about their business. They don't only use technical analysis, which the average trader uses, they use a lot of fundamental analysis. But there's one massive advantage that online traders have, and that is leverage. In other words, you can trade $100,000 basket of currency with only $1,000 in your account. Now that is the biggest advantage that you have. It is wonderful to be able to do that. That means you're actually magnifying your gains 100%. That is leverage. The broker will give you 100 to 1 leverage, or 200 to 1, or even some 1,000 to 1. that's what basically happens. They're saying you can magnify your gains by 1,000 times. But on the other side, you can magnify your losses by more than that, because there's a spread that you have to pay before you start making profits. So leverage is a big advantage that the online trader has over the more conventional traders that trade without leverage. So when looking at the success that you can expect from your trading, you need to take a lot of things into account. Firstly, you have to look at the capital that you have available, because trading is actually wealth creation using capital as its base. So you can't start with $200 and expect to become wealthy. So you have to have a good capital base to start with. You have to have trading skills. Now, trading skills don't happen from reading a book. They happen from trading and trading and trading. That's how you develop trading skills. It's like swimming. You can't learn swimming from a book. You've got to get into the market, trade like crazy, make mistakes, have fantastic days, and that is how you develop your trading skills. There's the psychological side that you have to master, and that's where a lot of people break down. They don't know how to handle risk in terms of being disciplined enough to stick to their plan. Psychologically, traders also are able to take losses as they happen. They don't get too overexcited about it. They learn from their losses. They analyze why the trades go bad, and they learn from that and make sure that they don't happen again. So winning traders have a completely different psychological makeup. They take responsibility for their actions. They don't depend on other people for their actions, and so on. Also, the biggest thing that will determine your success is your trading record. If you don't have one, then there's no ways you can measure yourself. If you have a bad trading record, you have a lot of work to do. If you have a good trading record, you are ahead of the game and you can build on that trading record. But the one thing you do need is a trading record. Even if you're trading manually or trading robots, you need to know how well you are trading. As simple as that. So there are a lot of things that go into trading. A lot of people want to walk into the trading with no track record, with no skills, with a dicey psychological makeup, because they don't know what trading is all about, and no capital, and they want to become filthy rich. Doesn't work that way. It is possible over time to build up those skills and those capabilities. Now, when we look at successful traders, there are specific things that stand out for me, and the one is risk evaluation and management. They do not take high risks when they're trading. They trade trades that have a very high probability of success. So that's risk management. And they manage the risk-return ratio extremely well in their decision making. The other area is they focus on the now, but have the long term in mind. So, and they will never compromise what's happening there long term by taking silly decisions now. So they always say, look, I want to be around in 10 years' time, so I'm not going to let this trading decision affect my future. It's a very subtle thing, but a very few traders think like that. And the other thing that they're good at is they match their strategies with the current market. They don't go in with one strategy and say, I'm going to use this strategy to become really wealthy. They learn 20 strategies, and then they look at the market and they say, well, a trending strategy will work very well on this particular currency. Look what's happening to this currency. I'm going to use a momentum-based strategy there. So they know their strategies very well, and they don't fall in love with only one strategy. It's a bit like playing golf. You need a club for every function that you need to do on a golf course. You can't tee off with a putter or a sand wedge. You use your driver to tee off. You can't use your driver in a sand trap. You use your sand wedge or something like that. So you need to develop the skills to be able to play all those clubs well when you have to. And a lot of traders go out there and they say, oh, I'm going to use a 5-iron for every shot that I'll ever hit. And they only focus on one club, and it's not going to get you anywhere. You need to master all of the clubs that are in the bag there. And that is why I love trading. It's very similar to golf. You've got to have that variety of skills. Now let's get to the topic of this video, which says how much or what can I expect from trading. Now firstly, I've got 4 levels, and that's just a model that I've come up with for this particular video. There can be other ways of looking at this, but I'm saying if you're a total beginner, you are not going to use real money to trade. You have to develop your skills. You've got to learn 20 or so strategies. You've got to broaden your trading ability, and therefore you're not going to make money. When you start out trading, stick to demo accounts and learn as many strategies as you can. Spend as much time in the actual market. While you're reading books about or learning strategy, look at the screen and trade. Trading is where it happens, not reading books and talking on forums and things like that. It's when you're actually looking at the charts that trading happens. Then the next step, after maybe 1 to 4 months, you become a trader with a track record. Now, you've got to ask yourself, what does my track record look like? And we always catch traders out. They always say, oh, this strategy is no good. So then we just say, all right, send me your track record of trading that strategy, and you'll find they've done 1 deal or something like that. Or they've abused a robot and traded it inappropriately. So your track record will tell you how good you are. Not how good the robot is, not how good the strategy is, how good you are. And that's why track records are the most important thing, and that's why I put that as point 2. You go from a beginner to a trader that actually starts developing a track record. And when you've got that, my recommendation is to go for a goal of about a 30% return per annum. So once you've got that track record, you can build a lot of confidence from a track record, and you can start planning your trading, and 30% per annum is what you should look at. So if you're trading $100,000, you should look at making about $30,000 from that. If you're trading $1,000, you should be looking at making $300 from that. So then you move on to the next level, which takes probably two years and may never happen. And that is the trader with an annual track record. So in other words, the year before last I made 50%, last year I made 60%, and this year I'm on the track to make 60% again. So you start looking at your trading career on an annual basis. Now once that happens, you start trading with risk in mind. So your career is now a long-term career, and the most important thing is to look at how much risk you're gonna expose yourself to, and you become more balanced as a trader. You know all the basic strategies. You've experienced them all, and all of those are now being put into place, and you trade conservatively with large accounts, with small lot sizing, and you slowly build up your returns. And your returns could be from 40% to 80% per annum. And that's more or less the sweet spot for a lot of traders. That's how much you can make. If you're trading $100,000, if you make $50,000, that's great. If you're trading $1,000, then if you make $500, that's also great. Then once you've got through all of that, you're at that point where you've got that annual track record and all that, and you are confident with your skills and you know how to use them, you can start getting more aggressive. So that's the 4th point. A lot of people go from beginner to aggressive trader in one step, the next day or a week later. You should only get there once you've mastered the skills of being an annual track record trader. That will prove that you've got the skills and maturity to last a long time in this particular activity. So when you become an aggressive trader, you can start taking bigger lot sizing on deals that are of a very high probability. And those deals only show themselves once in a while. So you just trade normally in your number 3 mode, and then suddenly a number 4 mode deal presents itself where the probability of success is so much higher that you can then increase your lot sizing. And because of that, these traders make between 100% and 200% per annum. But those are the levels that you're looking at. And as I say, it takes extreme experience to get to those particular levels. Now, I hope that gives you a sobering view of what you can expect from trading. Look at it from an annual perspective and look at it a return on capital. How much money have you got? If you increase that money by 100%, will that be able to feed your children? Now on your screen you can see a live portfolio. It's a portfolio that trades 10 accounts. There are the accounts. They're all trading the profit retriever, because the profit retriever is one of the most robust trading robots that Expert Forex has ever produced. But it needs a big account, and it also needs a good strategy, and this is what I'm applying in these particular accounts. You can see they're pretty large, and then you can see the profitability is not that great. 500, so that one's profitable, that one's profitable, that one's nicely profitable, nicely profitable, nicely profitable, that one's running at a loss. And that's the whole idea of portfolio trading. When one is battling and running into a drawdown, the others will help it out. And that one's nicely profitable, that one's very profitable, really nice trading going on there, that one's profitable, and that one's profitable. So you get an idea of using a portfolio to help the accounts that aren't doing well. The other thing is that this portfolio is only making basically a 3% a month return, and that makes it a 36% return per annum. And quite honestly, I'm quite happy with that. That return is pretty good. If I invested that money in let's say an apartment, I would not even come close to that kind of return on my money. So 36% is I'm pretty happy with. And why I'm also happy with it is such a low risk trading investment, this, because I will sleep well at night. My accounts are so big I could never get a margin call on them, and the strategies are quite secure. As you see, 9 out of 10 of those are nicely profitable. So on this portfolio, you can see at the moment it's making about $6,000 a month. Multiply that by 12, that's $72,000 a month. And I'm pretty happy with that kind of income with this low risk exposure. And I have tested these strategies quite well, and I'm happy to let them run, incur drawdowns when they happen, and the other accounts will help them out. So I'm also trying to give you an idea that you don't have to make 100% return a week to be a successful trader. You can do it on a 36% per annum basis. Now, just to repeat our linked account service, here you can actually go through all of those phases that I've mentioned, here we have some 4 traders, that phase 4 that I mentioned earlier, and they are generating accounts that are showing monthly gains that are quite good. You can see the monthly gains are very, very good. So what you can do now is you can link your account to those traders. Some of the accounts have got a very long history, some have got shorter histories, so you've got to take that into account. But you can go and link your account to these traders. Now, if you don't like the risk that you see, if you see the drawdowns a little bit too high, you can lower your lot sizing. That's how you manage your risk. So you lower your lot sizing. Let's say you go for that, let's see one that's got a nice low drawdown. There's a 7% drawdown, and it gives a 33% per month return. Remember, I'm happy with a 3% return. So a type of thing that you could do is you can halve the lot sizing. So suddenly your risk halves, but your return will also halve. You'll still get 16% a month, and with a lower risk, and your risk will remain for a 7% drawdown. So that's the games you play. You can lower your lot sizing. You can also increase your account size. So as you've seen in that previous statement, you can increase your account size. So instead of your returns being based on $10,000, they'll be returned, let's say, based on 20,000, and that will reduce your return in this case from 33 to 16% again, and that will may allow you to sleep very well, because you know the chances of a blown account are so remote. Now, I hope I've given you some ideas of what you can expect from your trading. It is important not to be too optimistic at first. Learn skills before money. That's always my motto. You learn the skills, develop them, and you can then move on to earning a slightly higher income once you have the skills. Don't get aggressive while you're still in the beginner or intermediate experience range. And hopefully you've got a better idea of what are realistic expectations. Let's say 40% to 100% is most probably realistic expectations when using leveraged trading accounts. And also there's the shortcut where you can just link your trading account to experienced traders that have gone through the mill already, and therefore you can benefit from their experience and trading knowledge. So from me, Alex Deploy, cheerio.